Hello, my people. How are you, everybody? How are you, everybody? Today is a good Saturday. The week has just closed. Very much profitable. I have had about five pairs all went into profit. I avoided loss with one trade. And remember that with Gatosefx and the zone-to-zone trading strategy, I normally prefer to take long trade. I'm a swing trader. I've been holding this trade for the whole week. The analysis was done since Sunday with my mentees, my students in the class. We were together analyzing these pairs, and I told them, let us watch them play throughout the week and get to see where this trade will take us. Of course, there is a lot of great lesson with this trading, um, just by understanding the market language, the trend, area of interest, and entry liquidities. But being patient and resilient is what matters most with trading. And you could see here, even from my confluence, I all outline whatever is happening with these trades, and we got to see now how these trades play out. All right, let's cut this all short and move on to see how I was able to spot these opportunities and how I was able to avoid some losses. To begin with, NZD dollar, here is how the price was on June 16. It was on Tuesday. I've already spotted my potential weekly zone where I anticipated that price would come to test, and then we could continue with the trade. As you see, I say I normally rely on the confluence. Plan the trade, trade the plan. You need to be ahead of your trades. Trust your analysis, especially when the market is closed, right? And then avoid random entries. This is a very key factor fundamentally if you want to be successful in your entries and exits. Respect the entries, respect the exit. Like as you see here, the entry was perfect and the exit was literally the same spot. Look at the number. It was 0.57234. Same. Okay. So let's cut the story short and do the top-down analysis, backup review of how I spotted this trade. Actually, this trade, I populated it from the monthly time frame. Everything began with the monthly time frame. See here? So despite the fact that this is a continuation of what happened with the bearish trend, but when we look at the major structure, this market has a major structure trending bearish, right? Since 2021, this market is maintaining these lower lows, lower highs. By then, since December last year, this price is moving in this consolidation. So the minor structure, the current market is what is doing consolidation, right? This consolidation is also seen in the weekly time frame. We come to the weekly time frame, we will see this consolidation taking place. Like market is bouncing between the monthly lows and monthly highs. We come again to touch the lower zone, going to the lower high. So there's no perfect structure under these circumstances. So you really need to have the ability to make a distinction between the major structure and the minor structure. And this is a very key fundamental, especially when you are in the higher time frame. And I normally say when market is having the consolidation of the higher time frame, we do nothing based on the looking for the minor structures to get a trend. We just mark that consolidating zone, the highs and the lows, and focus on the next lower time frames to identify what are the other structures follows, right? Now here is where this trend ended. After observing the current market, we had a lower low, lower high, lower low, lower high, and eventually we have had this very strong Maruboza candle, which was able to break under weekly price flow zone. We have had a mid-range here of the weekly price flow. We have had an engulfing candle, which engulfed almost 1, 2, 3, 4, 5, 6, 7, 8 weekly candles. This indicating that what? Sellers are now powerful. Sellers are taking over the market. And it followed with what structure? It was a very simple, very simple confluence, which was an EDE. EDE confluence ended all the business was NDD USD pair. See the engulfing followed by doji. Then what next? It's just an EDE concept to take this trade to the downside, right? So in terms of confluence, as you can see, we have had a monthly major bullish structure. We are having a weekly consolidating zone, price breaking under the weekly price floor zone, giving us a confluence of what? Weekly EDE. I think I marked it here. See, we have weekly EDE confluence or entry liquidity. Now, I went to the daily time. See what happened. So, coming to the daily time frame, here's what we see. Daily time frame was potentially bearish. This market is moving upside, and eventually it's allowed to break under the weekly price floor. See, we were bullish, now we float under, now we are bearish. Okay, so the nature of the trade becomes bearish continuation. It's a bearish continuation. So I'm looking more for sales opportunity rather than buyers opportunities. Then let's go and look at the potential liquidities formed within what? Within the area of interest, which is the weekly price flow and the price ceiling zone. If you look at the line chart, we potential see the liquidity flip being tested here. You have this liquidity flip at the area of interest, which was already being tested, right? See here, it was already tested, followed by the daily pin bar, which is a sign of what? Which is a sign of reversal, all right? And this day pin bar went to test the SIS liquidity. Here we have had an SIS liquidity, which was tested by the day pin bar. Normally, remember, the candlestick of the higher time frame speak a lot of information based on the behavior from the opening, closing of those candles. Start the candlestick Bible if you want to get more understanding of this candle, but not. We only rely on the candlestick of the higher time frame. Daily time frame going above. In case of lower time frame, we only use them for confirmation entry, like the gapping, 1 hour, and so forth. But for the structures of the higher time frame, we rely on the behaviors of the candles of the higher time frame. So under these circumstances, now I have had a synchronization of the more than one higher time frame moving together. Like we see, the weekly time frame bears are taking control, and the daily time frame sellers are also taking control. So these two time frames tell us the opportunity is to sell this market. Like literally, let's see the 4 hours time frame on the 16th. Today is 20th, right? There was a very clear bearish momentum here. We have got a lower low, lower high, lower low, lower high. These candles are the one which were forming the daily time frame pin bar, right? And they gave us a 4 hours time frame shift. So what happened? I was just waiting for the entry signal for the price to get into the area of interest. What was the liquidity? We have had this liquidity engineering here under the weekly time frame area of interest. So that's how I spotted this opportunity in a 4 hours time frame. It was very simple. I just placed my limit order. When price got into the area of interest, took the entry and keep on holding it. Please hold the trade. Hold the trade. Trust your confluence. If you anticipated price will go somewhere, stick into the plan. Stick into the plan. That will make us very successful. So why did I stop this trade and exit at this area? The liquidities that I normally use to get in the market are the same that I use to get out of the trade. Like I observed from the daily time frame, we have had what? You see, you have a previous low here, you have liquidity engineering here. So here is where I got out of the trade. And you see the moment price yesterday on Friday hit this point, these buyers started to take over the market. But I don't confirm that we have a reversal. I don't know for the next week. We just do another analysis for the next week. But this is exactly what was supposed to be done for the last week with NZD USD dollar gained its momentum. Very powerful as we all see. So the trade gave us a 1-to-3 ratio, risky to not it's a 1-to-3 risky to reward. It's very potential. It's very potential. 100 pips is very good for the week, right? So this is what happened with NZD USD. So let's go and look to another pair. We had a Euro USD. It was one of another very potential trade last week. Gave us about 184 pips. Very, very amazing. Very, very, very much amazing, right? But this one went with the concept of AMD, accumulation, manipulation, and distribution. And I haven't even cleared my past analysis. You see, this is 4 hours after the break of this structure. I saw this market on weekend. It was here. Price was consolidating here. So I thought, and I was very confident that when the new week opens, we'll get this distribution manipulation up to the neckline of the equal highs. You see these equal highs? These are the equal highs. So the neckline of the 4 hours equal highs at the potential area of interest gave us a confirmation for continuation of this trade. Price took this trade here for the first entry. We have had a little bit of consolidation for at least 2 days. And then during FOMC last week on Wednesday, we experienced a massive, huge movement. Look at this 4 hours candle. It went about 126 pips. This is not an easy thing. This is amazing. This is good. But all in all, what matters is to stick to the principles, following the trend, understanding the entry and exit criteria, while remaining consistent with your trading plan. That's the key potential issue. All right, let's break it down from the higher time frame perspective to see what I was looking. All right, now if we look at the major structure, at the bigger picture, Euro USD has a major time frame bearish, right? So all these movements since pandemic corona in 2022, it is a bullish movement of the higher time frame retracement. Price has never been able to break above these equal highs or the latest lower highs from the higher time frame perspective, right? But that's not important. What's important is the current market, because you want to take a trade which gives you an opportunity at the current week, perhaps maybe current day, right? Now, observing this market from June last year to date, we are having this consolidation, right? At least 12 candles here. We are having this consolidation. Now, if this is the case, then we're going to focus with that, right? As you see here in my confluence, I stated it very clear. We are having a monthly consolidation. Recent market minus structure, we are consolidating. All right. Then let's go to the weekly time frame. During consolidation at the higher time frame, we do nothing. We just observe the structures from the next lower time frames, right? Now, what happened with the weekly time frame? We see the weekly time frame is also consolidating. Major structure is consolidating weekly time frame, right? But here, let us look at the minor structure from the weekly time frame within that consolidation. We have a bearish momentum, minor structure, lower low, lower high, lower low, lower high, lower low, lower high. What do you expect? You expect to have a lower high to continue with the bearish momentum. That's how simple it is. the line chart, it looks very much clear. You have a structure break here, you have a structure break here. Now, always when you are selling, please, my dear fellows, look for the premium price for you to maximize your profit and utilize better your capital. And when we are buying or we are going long, we should ask for a discount. Asking for a discount means what? Means waiting patiently without emotional interference during your time looking for the entry. So here is, you can start this market structure perfect well. You can start fundamentals and understanding everything, but controlling emotion is something that you will need to force yourself to have such a discipline to control your emotions when the market is opening, right? And see now, since we understand we are bearish in terms of trend, what are we looking at? We're going to get a trend, right? Then let's look at the day time frame and add more meaning from what we have been taking into consideration from the higher time frame, right? Now, we want to see the alignment of what we see is happening in the market. The current daily time frame is bearish. You have a lower low, lower high, lower low. What else? You expect to get a high. What is the liquidity here? Is a daily time frame SIS. See? And mark it here. Simple. Just placing my limit order. I just placed my limit order here based on the daily time frame SIS, which was also a potential 79% of Fibonacci retracement, a maximum, optimal, efficient premium price. The confluence are aligning now. You have an SIS liquidity. After this market broke under this strong daily time frame price flow zone, anticipated a retest, which took at least a 1 week and some few days. Retesting what? The opening price of the candle, which potentially broke the zone. Here is where liquidation took place when we studied the behaviors of the candle. At the same time, at that spot area, we have had an SIS liquidity. If you don't know about SIS liquidity, click into my classes. Here are my contacts. Here are my contacts. Then I'll teach you about the liquidities that I'm using to get into the trade, the same to get out of the trade. Now, let's look at this confluence. Monthly time frame, I said here, we are having a consolidation. We are having a weekly major consolidation, but minor structure being bearish. We have daily time frame bearish and also for bearish. So the trend is bearish and the nature of the trade is what? Bearish continuation at the area of interest, which is a daily price flow and price ceiling zone. So this was it was a daily PFC price flow and price ceiling zone, right? If you don't know about the price flow and price ceiling zone, please contact me. All right. Now, since I take a trade from the daily time frame, I risk about 35 to 40 pips, depending with the nature of MPV of the pair, money value to pips of the pair, because they differ in terms of volatility and the money value. So that's another subject of how to set your stop loss and take profit, right? Now let's look at the take profit area. Of course, I have had a TP1 and TP2 of the Fibonacci level. I wanted to go up to TP2, but on Friday yesterday, once I found out that price has reached at this front side LQE liquidity from the very lefty side here, I just chose to close this trade because it remained only very few pips to hit TP2 perhaps. Maybe next week, I don't know, but I will do a new analysis tomorrow on Sunday, and I'll be here live with you guys, right? Now let's go to the 4 hours and finish the job where we have had an AMD concept, which aligned with what we were, I was looking at, daily time frame. Remember, the entry potential liquidity was daily time frame SIS. It was confirmed and moving in sync with the concept of AMD from daily 4 hours time frame, because 4 hours time frame we are also bearish. You see lower low, lower high, lower low, we need to have a lower high up to daily SIS, right? Accumulation, manipulation, and then distribution at the 75 optimal level of Fibonacci. By then, where we had daily time frame when say yes, daily time frame 79% Fibonacci level, we had 4 hours neckline of the equal highs. You see here? We had these equal highs and the neckline of the 4 hours equal highs. So what guard should also give you to confirm your entry? Nothing more, nothing less, rather than pressing the order. I actually placed the limit order. The entry was triggered on Monday. Until Friday, I harvested 184, which is a 1 to 5 risk to reward ratio. Very potential, very potential. So this is what happened with Euro USD. By then, I had another one with AUD CHF. This trade, I took it out of the daily time frame. Daily time frame was the latest time frame confirming this entry. All right. So taking a trade from the higher time frame does not necessarily tells you that you have to use a bigger size for risk in setting your stop loss. PMB matters a lot. Setting stop loss depends with the structure. First, you need to observe the structure. You need to understand where you exit your trade as well. Of course, this one, I didn't close it. I think I will close it next week because I'm still very strong, confident that we will still go up there because we are having a weekly higher highs where I set my profit. By then, when I was looking to take this trade, let me price was here. I was looking for the shift of the structure through the line chart because the candlestick have had a lot of wicks hanging there, so the line chart gave me a very good confirmation. I said if we break above with a daily time frame, this price will come to the test of what? This liquidity engineering, which was formed here. And I set a 29 stop loss with 91 pips for TP, a ratio of 1 to 3, risky to reward ratio. All right. Now, let's go and look from the higher time frame to add meaning at this. Okay. Look at the major structure now. If we look at the major structure, this trend is bearish. You have a lower low, lower high, a potential lower low. So now this price is buying a higher time retracement. So major structure is bullish. Major structure is bullish, right? Okay. Now, if major structure is bullish, look at this momentum. Since when? Since April last year, this market has been bullish, retracing and getting into the higher time frame correction phase. Here is where we are. Then, as I said here in my conference, we have major structure bearish, but minor structure bullish retracement. Then let's go to the weekly time frame and add more meaning, confluences with respect to what we have observed from the monthly time frame. All right. So looking at the current weekly structures, what do we see here? We see this market is bullish. You have a higher high, higher low, higher high, higher low, and again higher high. So we are bullish. This is what's happening now. Although not forgetting the fact that we are bullish weekly time frame with respect to monthly time frame retracement down, but we have a lot of weekly rejections here. These prices in weekly time frame are leaving us with the hanging wicks, indicating that the power of the seller is trying to reject bull's power. That's okay. Let's look at the opportunities that we can get from this trade. All right. Now, I went to the daily time frame and observed that consolidation which happened here. So, I look at the major structure of the daily time frame, which was bullish. You see, major structure is high, low, higher, high, higher, low, higher, high, higher, low. You have the higher high. So any cells not breaking under this specific area, we are still bullish. So any cells is just a matter of retracement. That's why I say, and I looked at it very clear through line chart. I said, if we have a bullish candle closing over and above, it will confirm as what? With a direction change, we'll wait for the pull back down to continue with the market the upside. So something which happened on Monday, Tuesday, the entry was triggered, and then on Friday, we continue to go up, 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 up. So I'll still keep holding this trade to next week to finish my business. All right, this is what happened with AUD CHF. Not only that, with CHF, I have also had a GBP CHF. I've had a GBP CHF, all right, which was also a potential bullish trade. I looked at the channel. We have had a channel from the monthly and weekly time frame. At least weekly time frame, it looks very nice. But let's start with the higher time frame, which is the monthly, in order to add meaning, right? Now, what was the observation? Despite the fact that major structure is bullish, so if major structure is bullish and now we are buying, only two options: either the trend is over, or we are having a higher time frame retracement. But look at this trend since April last year. This price is moving in a bearish channel, something which through the weekly time frame we would see it much better. Right? You see how this price was trending bearish within the channel, bouncing down and up within this bearish channel until the previous week. We have had a full bullish candle Barbosa closing above the channel. That was the only indication that this bearish trend, bearish channel is over. It's over. It's done. Otherwise, a price action wouldn't have allowed this candle to close above this bearish trending channel. And where it closes up, we have had a very perfecto weekly time frame price flow and price ceiling zone. It is a PFC. What do you expect? We have a CLC here of the weekly time frame. It's the break and retest. Simple like that. And now we have a pin bar. So I'm expecting next week we'll have a major continuation to the upside. So where we are going, I'm going to take my profit. You see TP1. TP1 is here around the bottom gap of the daily time frame. We shall see it later in the daily time frame. Here is where the TP1 will be, and the TP1 will be having at least 112 pips with the 1 to 3.5 risk to reward ratio. All right. Now, so for the weekly time frame, it was simple break. I was waiting for the retest, but now here comes a very major point. Where do I take a trade? That's very important and very key factor is the entry point and the exit point. Okay, I always say plan the trade and trade the plan. Right now, look at the daily time frame now. You have a major higher high, higher low, higher high, higher low, higher high. So we needed to have a higher low where at the weekly time frame area of interest in order to continue the bullish movement, right? What about the Fibonacci from the recent lows and recent highs? We have had a 62% Fibonacci level, where also we have had another liquidity, which is a daily flip. Look at it from the line chart, you see it better. You have a only high, thrust up, thrust down. Perhaps this could have acted like a liquidity engineering and pull down the market. But since it failed, it pulled above, then it comes to act as a liquidity flip. Liquidity flip is one of the entries liquidities that I use. All right. So liquidity flip happened at what fib level? It happened at 62% optimum Fibonacci retracement level. That's where I set my limit order. Okay, I didn't use market execution with this trade. So I waited on Monday market opened on Monday, Tuesday, Wednesday. The entry was triggered Thursday, and eventually Friday yesterday. Because of this rejection here, of course, we anticipate to have a little bit pullback, and then next week we will continue to go to the upside. So with this pair, I only relied on 3 time frames: monthly, weekly, and I took my entry at the daily time frame. I said 31 pips for stop loss. My TP is 144 pips, so I'm looking for. I'll continue to hold this pair. I will continue to hold this pair. Of course, next week we anticipate to have a little retracement, perhaps maybe to this zone before market continues with the upside. But since my entry was finally at the daily time frame, I will remain watching the trade through daily time frame. That with GBP CHF. The other one is USD CAD. I've been holding it since the previous week, so I'm not going to talk about it because I already have a video posted about how I took this entry at a candlestick MDL liquidity within a weekly time frame PFC, just to have a reminder, that this trade was triggered here after the confirmation of this weekly candle closing above this weekly resistance zone. Then we came to the daily time frame to retest what? The EDE, the MDL, which is in form of candlestick. Then price took this trade up to the TP, about 245 pips. All right. But then I have had pairs which I avoided loss. JPY, I didn't enter this trade, although I've had very good analysis with this trade, but I didn't take the entry. I'll talk about it. When this week began, I had very confident with Euro NZD. I wanted to sell Euro NZD. This was my number one favorite pair, but it didn't work out and I avoided loss. So let me tell you a little bit simple how to avoid loss when things do not align. All right. Now let's start with the 3 months time frame. I started with the 3 months time frame, whereby I saw this price had reached this strong resistance zone around there. I came to the monthly time frame. I observed the bearish momentum. Of course, we could have a chance to sell this trade next week. I see the potentials, right? We have had higher, high, higher, low, higher, low. It's a shift of structure from the monthly time frame. Price came to retest. So now I was looking for continuation. Okay, so this retracement, I know that's going to test some liquidities before we proceed with the continuation. Then coming to the weekly time frame, what was the observation? The observation was that you see here from the left, you have the potential head and shoulder at the reversal. Price came to the test inside formation. Now we have lower low, lower high, lower low. And I see what's happened here now. This price came to take out all this liquidity which we are hanging above this weekly time frame, equal highs. But I don't like the way this bullish candle has been closing as a weekly, so I'll be remaining very patient, right? So I saw that we have had this retracement. We have had there's a doji here, which gives us a bearish harami candles and the potential area of interest. So all these confluences were giving me a potential observation that this trend is going to the downside, right? Okay. Now, coming to the daily time frame, what was the observation? Well, that's a bearish trend. See low, 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 high, low, 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 high, low, low, high, low, low. I was very happy with this candlestick, which we are leaving these hanging wicks, like grabbing all the sell stops liquidity above there. So my only confluence to take a sell of this trade, you see this potential support zone here. I wanted this week to have a daily candle that would close under this strong support zone, retesting the liquidities which would have been formed here, and then continue with the bearish agenda. Something which did not occur. If it didn't occur, no trade. Remember, In my classes, I say always we have 4 different types of trade. One is reversal. It has its features. And reversal. All right, spelling error. Reversal. All right. Another kind of trade is continuation. It has its own features. The third type of trade that I'm taking is counter trend. Counter trend, it has its own features. And the number 4, which is very important, no trade. No trade is a type of trade if and only if your confluences does not align. Something like this here, you see? And watch it. Watch it. I say, plan the trade, trade the plan. Plan the trade, trade the plan. What was the plan? The plan was to break under, retesting, and then continue. It didn't happen. No trade. End of story, period. Nothing more, nothing less. Just because now the trade has been, the week is over, I still trust my confluence. And this is an open, this is a very open signal I'm giving you guys. I just extend and move my charts here to this point. I'll still be looking for this pair next week. I still hope something will happen. It's 4 hours and daily time frame. Let me take a shot. Let me take a shot and see what happens. Okay? So this is my plan. The plan remained the same, but it didn't happen. Only we break under this area, we will take this trade to at least here 300 pips is too many. Where will be the TP1? If we get this entry, here will be the TP1. Here will be H4 TP1. VH4 TP1. Okay. How many pips to TP1? Yeah, 220 pips is humongous. It's good. All right. So guys, this is Gatosefx. Till next time we meet again. We shall continue next week. Tomorrow I'll be having a very beautiful classes to review with my students. For those who want to participate, my pre-weekly analysis, please contact me through this number, WhatsApp. All right. Thank you and have a nice weekend. Until next time.